Hello guys, welcome to the weekly trading idea. Today we will analyze the USD CAD pair fundamentally and technically. So let's do a small recap first about last week's video. Last week we were analyzing the dollar index. As we said, price corrected 61.8 almost, and then it's now correcting from the down move. We are now sitting at the 50% retracement. We might be even correcting to the 61.8, but we'll be focusing on the breakout for this channel to sell the US dollar. Looking at the economic calendar, jobless claim last week soared to another record at 6.6 million, as you can see, compared to 3.5 expectations. Also, the NFP release on Friday was way below expectations. The US lost 700,000 jobs. It's important to note that these ugly numbers were measured before the lockdown in mid-March. So expect next month to be much worse. Believe it or not, the US dollar didn't fall after these horrible numbers because the US dollar is taking now a safe haven bid all over the world. You don't want to put your money on Australian dollar, New Zealand dollar, Great Britain pound, of course not euro. So your choice will be as investor, the US dollar or the Swiss franc. The Swiss franc, we all know that negative rates about minus 0.75. So the US dollar is now a safe haven all over the world. That's why we're having a strong US dollar. This week we have employment report in Canada on Thursday. And as you can see, it's expected to be negative at minus 350,000 jobs lost. Also, the unemployment rate is expected to rise to 7.2%. So we'll be watching the deviations here. Of course, the number will be negative anyway. But if there's a big deviation to the downside, it's going to be really bad for the Canadian dollar and vice versa. Also, about oil, Russia said that the preparations for talk are going and it's ready for cooperations with other oil exporters to stabilize the market. Anyway, positive talks will help boost oil prices, which is good for the Canadian dollar. Okay, as you can see, oil prices jumped to 28.5 after the news. Also, Trump is putting pressure on Russia and KSA because he threatened with tariffs on foreign oil. Now, what traders are doing is buying the rumors. If the negotiations were good, oil might fill the gap at 41. Now let's check the technical analysis on USD CAD. So speaking weekly chart, price tested the 2016 highs at 1.4675 and then bounced back. As you can see, the RSI also on the weekly chart broke down. Notice every time RSI broke down on the high time frame, we would have big movement, as you can see here and here. Zooming to the daily chart, also we had a nice double top on the RSI, which signaled a down move, and we might be even now having a flag. Zooming to the 4-hour time frame, we have big channel here. Also flag here. It might be a triangle too. Let's see. It could be considered as triangle too. In both cases, we'll be watching the 1.41 level because a close below this level on the 4-hour time frame would expose the bottom of the channel maybe at 1.38. So first scenario is break to the downside and maybe then bounce to the top. Second scenario is a break to the upside if negotiations were bad and employment report in Canada was also very bad. A break above 1.425 might expose the top. So very critical levels to watch here, and it will be a nice opportunity. So that's it for me this week. Thank you guys for listening, and I will see you next Monday.